John Bellows, Treasuries have had a great ride over the past year, but how much further can govies go?
They have had a great ride. You know, inflation's fallen, global risks around the world have all created a bid for Treasuries. Our view at Western Asset is that they're probably at the low end of their range on yields. At the same time, given all the risks, it's really tough to be short Treasuries right now.
All right, and in your Western Asset Core Plus bond fund, about 20% of that is in corporate bonds. How do you pick them?
Well, first I think you have to establish a macro view, and our macro view is the environment's going to be pretty favorable for corporate bonds. You know, the U.S. economy has some momentum, inflation's low, the Fed's accommodative, that all should be pretty beneficial. And then we try and marry that with a bottoms-up view, and our bottoms-up view right now is we like financials and some sectors of the energy market.
You think that the strong dollar is going to hurt a lot of some of these corporates that you own? Because we're seeing it in first quarter earnings.
I'll tell you one thing is the strong dollars could push down inflation, and that's going to make the Fed more accommodative. As far as corporates, you know, it's a mixed bag, and the faster growth in the United States, I think, should outweigh that, and we like the prospects for corporates.
I meant fourth quarter earnings, but we're in the first quarter right now.
Gotcha.
Also, talk about energy bonds, because the oil patch really fell apart in the fourth quarter, and we're seeing that reflected in earnings right now.
You know, the energy bonds are a place where that bottoms-up credit work is really important. Our view is that if you're able to choose companies with strong balance sheets, with some flexibility, they will be able to adapt to this new environment. We think there's some value there, especially given that yields on some of those bonds are 10%. But it really does require a bottoms-up work on that balance sheet.
Well, yields are really low in European bonds, foreign bonds. Talk about whether or not you want to tiptoe into Greece, right? Or Italy or Spain.
You know, those are tough. We're Western Asset, we're not involved in Greece, but there are places around the world that we do like. Some of the emerging market bonds we find it interesting right here, especially places where low inflation is going to be beneficial for their economies and allow their central banks to cut. So I think we would prefer the emerging market bonds to someplace like Greece.
And then finally, speaking of central banks, thanks for the segue, what's the Fed going to do this year?
You know, I think the Fed needs to be cautious. Growth in the United States is very good, but the inflation outlook is uncertain at best, and there's a lot of downside risks. Given the inflation outlook, I think the Fed will probably delay. I think it's more likely to see a hike towards the end of the year. And again, I think the Fed needs to be cautious here.
All right, thanks a lot, John.
Good, thank you.
And thank you for watching The Street.